This show is brought to you by the Genesis Communications Network, a world leader in talk radio since 1998. Visit GCNLive.com today.
The stocks discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. If considering on acting on information, we first recommend you seek out a competent, licensed professional for advice.
What kingdom has sent you?
The kingdom of the Most High.
Nothing you have ever experienced can prepare you for the unbridled carnage you're about to witness. Super Bowl, the World Series, they don't know what pressure is. In this building, it's either kill or be killed. You make no friends in the pits and you take no prisoners. 1 minute, you're up $500,000 in soybeans, and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The Genesis Communication Network is proud to bring you Wall Street Raw with nationally recognized market timer and previous Wall Street Week elf, Mark Leibovit, welcoming you on board his financial time machine. And here is the elf himself, Mark Leibovit.
Good morning, everyone. It's Mark Leibovit, and welcome to Wall Street Raw on the Saturday morning, June 4th, 2016. No other day like it, and we certainly appreciate you tuning in here on the weekend to listen to my rantings and ravings about the market and the economy. As you know, I'm a bit of a contrarian, a cyclic analyst. My website, vrtrader.com, and my volume reversal indicator, along with, again, cycle work and contrary thinking, are part and parcel to what we do. I'm very fortunate. Some of you may have recognized my name from the old Louis Rukeyser Wall Street Week television program as I served as an elf, or you might have seen me as a nightly business report market monitor guest with Paul Kangas over the years on PBS. My basic premise is that markets are rigged, and they have been rigged worldwide more aggressively here in the last 30, 40 years than at any other point in history. We're talking about the stock market. We're talking about currencies. We're talking about interest rates, just the gamut, gold. In fact, we talked about this last week, and perhaps we'll go over it again this morning about the lawsuits and the admission on the part of big companies like Deutsche Bank and Goldman Sachs that they were defrauding the United States government for nearly an entire decade with the manipulation in the precious metals market. Not a lot of coverage in the financial press about this, and that brings me to the other point that I make on the show and in my newsletter about the state of American journalism, which I feel is on the verge of collapse. Ideology has permeated the hard news coverage, and we're not getting hard, honest reporting. We're not serving the role of the fourth estate. I try to do that on this program. I think honest reporting is almost scarce, both in the financial and political circles, particularly in the political circles when you see Obama being given a pass over and over again for misconduct simply because he's a black man. Nobody wants to go after him. He should have been impeached, especially if you're a Democrat. You know, something is really wrong here. Why doesn't journalists stand up for the rule of law? The financial press is equally irresponsible, accepting government and corporate reports as gospel, routinely accepting employment reports as legitimate without questioning or challenging them. The unemployment numbers are one. So basically when I sit down during the day and I'm listening to financial reports, I just tune them off because I know they're being manipulated. Wall Street engineers stock prices, as we know. We've talked about that. Buying back shares, lowballing analyst reports. So we know it's a rigged game, and I've been doing this for 35 years, and that's why I created my technical indicators to try to follow the so-called smart money, look at the charts, and try to get a sense of what's going on here, even though, we're playing, in no sense, with our hands tied behind our back, but we can follow what the smart money is doing and what the big boys are doing, and we try to capitalize that. And because I've been successful at doing that, Timer Digest magazine on numerous occasions has me ranked as a top market timer. in the U.S., been timer of the year on one or two occasions, always or nearly always in the top 10 list in terms of trying to get a sense of the market. And in that sense, where are we now? Well, some of the indexes have recovered nicely here. We're perhaps experiencing part and parcel to a summer rally, but my work says, sell may go away. We're extended in many of the indexes that have rallied off the February lows. And between now and the fall, I think there's going to be another big correction. And looking out beyond that point, regardless who gets elected, in November, there's a chance of a bear market. So we're just going to have to watch the numbers. And despite my commentary and my feelings about that, you have to trade what's in front of you and act accordingly. So that's what we do. We had some great trades this past week at vrtrader.com. So I encourage you to check over there. In the gold market, for example, which had sold off about $100 an ounce, we had a nice rebound on Friday. Whether that's the beginning of a big move, we'll take it a day at a time. In terms of the short term, in the big picture, it is going higher. I think over the next 2, 3, 4 years, we're going to see continued advance in the market, that gold market and silver market. But, you're going to get some volatility along the way, big shakeouts like we just saw with gold running from 1040 up to 1300 and back to about 1200. So we're going to trade it along the way, always keeping, I guess, a core position out there. You don't want to sell your coins, that's for sure. And speaking of coins, big move this past week in Bitcoin. Not much of coverage I've seen anywhere about that. Bitcoin getting up into the 550, 560 area. Of course, it's nowhere near as high we saw in the last few years, up at $1,200 for a coin, but it exploded to the upside. And there's one particular ETF that we track, and we talk about in our newsletter, that was up 10 points on Friday, and that sort of mirrors the move in Bitcoin itself. But the move in Bitcoin could be a canary in the coal mine. Why is Bitcoin taking off here? There have been, concerns about some significant negative event in the banking system. We do have Brexit coming up here after mid-month. That's the vote in the United Kingdom, whether they're going to stay in the European Commonwealth or not. Of course, coming up mid-month also, we have the Fed meeting with, of course, our friend Janet Yellen and the other Muppets that I refer to. Basically, one day they're dovish, one day they're hawkish, and whether they're going to raise rates or not. But it's all perverse, considering negative interest rates in Europe and Japan, deflationary forces around the world, and we're going to raise rates. And everywhere you hear from financial commentators how great the U.S. is doing, and justifying higher rates makes sense. Well, it makes sense for the banks, which are the troublemakers, and this is one of the reasons we talk to my friend SINCLAIR and we talk about his column, eatthebankers.com, because they're really the co-conspirators out there, or maybe even the conspirators with the Federal Reserve, since they actually own shares in the Federal Reserve. If you read the original Federal Reserve Act from 1913, you can get an understanding of the connection that it's a private federally chartered corporation and who the banks really are in relation to the Fed and who the Fed really is. But meanwhile, higher interest rates help the profit margins for the banks. So they're obviously looking to see rates move up, but they're the first ones that get bailed out. And we know what happened in 2008 and 2009, where Wall Street took precedence and the banks over Main Street. So nothing new there. But the story in Bitcoin I thought was fascinating because that's something not much talked about, and it could be a refuge if something more significant could be unfolding here. And I really think our nation is in trouble. And the seeds of more civil unrest and even the risk of a possible civil war exist out there. You can see the discontent in the streets here, discontent on the Democratic side with the Bernie Sanders, Hillary Clinton vote coming up, and then, of course, all the troublemakers out there who I think are just leftist troublemakers, and their sponsor. This is just not arbitrary events, in my feeling, and a lot of potential violence could be moving ahead here. So, got to watch yourself here in the weeks and months ahead. It's a lot of trouble could be brewing. Meanwhile, we have two special guests today, and stay tuned here at Wall Street Raw for next for SINCLAIR Now.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
your Google search results killing you? Unflattering content in blogs, news articles, online reviews, social media, or other sources can jeopardize your reputation, your business, and your livelihood. Let Reputation.com help. Our patented technology will make the truth about you more visible while pushing down unwanted negative content. Improve your Google search results. Call Reputation.com at 1-800-831-0771 for a free consultation. That's 800-831-0771.
Are you tired of commuting to a job that makes someone else rich, working harder than ever, but getting nowhere? Do you hate spending hundreds of dollars every week on daycare, having someone else raise your children? With our opportunities, you can start earning money as soon as next week. You get to be the boss, work from home, and live a happier life. At Be the Boss Network, you'll find hundreds of work-from-home opportunities that you can literally start today and be earning money as soon as next week. Go to freedom106.com and start earning money as soon as next week. You get to be the boss. Get out of the rat race. Work from home. Go to freedom106.com right now and change your life today. That's freedom106.com. Go to freedom106.com and start earning money as soon as next week. You be the boss. Go to freedom106.com.
Water is the single most important thing your body needs, so you want to be sure it's the best for you and your family. Since 2005, thousands have depended on Berkey purified water. The Berkey Guy provides the lowest price filtration systems in every size. For incredibly delicious water now and in an emergency, get to GoBerkey.com or call 877-886-3653. 877-886-3653. GoBerkey.com.
Would you like to receive $250 to $1,000 cash per day? Go to richmoneyrich.com. No website, no selling, no explaining. Just take these simple 2 steps and go to richmoneyrich.com. You can be generating cash in the next 24 hours simply using this system. Good news is, it runs on 100% autopilot, and you don't need any experience to get started. It's easy. Get your share of easy riches and go to richmoneyrich.com. That's richmoneyrich.com. Go now. Brought to you by the Conservative Investor. Current returns not indicative of future results.
Hi, this is Ron Paul. I'm a former 22-year congressman and Republican presidential candidate. I'm here to tell you about something that just might save your lives. You never know when there will be another Katrina, an economic collapse, or a serious drought. We should all have a little food storage that will carry us through tough times. I'm going to tell you about a great way to do that. A U.S. company named Harvest Right has a kitchen appliance that can help you be prepared. It's a home freeze dryer. With the product, you can preserve the foods your family loves. And the best part is the food will last 25 years and still taste great. I've tried it, and it's amazing. With a home freeze dryer from Harvest Right, you can literally freeze dry anything you eat, even things like ice cream. To learn more, call Harvest Right today at 800-594-4635 or go to harvestright.com. That's 800-594-4635 or harvestright.com.
Vaping enthusiasts, head to VaporPalace.com. Choose from over 150 flavors and a selection of exclusive private stock vapor liquid you won't find anywhere else. New flavors are added every month, and our customer service is unbeatable. VaporPalace.com offers 15% off all vapor liquid on Fridays and get 10% off every order with coupon code VAPOR10 at checkout. Combine the codes on Fridays for 25% off. The ultimate destination for the vaping enthusiast. VaporPalace.com.
Think positive. Never show any sign of weakness. Always go for the throat. Buy low, sell high. Fear, that's the other guy's problem.
Welcome back to the Wall Street Raw radio show with Mark Leibovit, your time machine for the financial markets. Want to know more? Go to WallStreetRawRadio.com. Now, here's the elf himself, Mark Leibovit.
Welcoming back my very good friend and special guest, SINCLAIR No from KFNN 1510 Phoenix and author of the blog EatTheBankers.com. Well, Sinclair, it looks like somebody ate the non-farm payrolls number this morning, or yesterday, I should say, when the report came out that only 38,000 jobs increased during the month when the expectation was for a lot more. So suddenly the stock market turns down sharply, then it tries to recover, and the expectation now is less likely the Fed would raise rates. Is that where we're at?
Oh, yeah, and it's not a typo, by the way. 38,000 jobs. That's the fewest jobs added in more than 5 years. This thing just fell right off a cliff. And here's a little strange thing. The unemployment rate actually dropped from 5% to 4.7% in May. So this was a little bit weird because the unemployment rate dropped for all the wrong reasons. More people got out of the labor pool. They just said, well, I'm not finding a job. I'm not going to even try anymore. Completely wrong reason for the unemployment rate to drop down. 38,000, nobody was expecting that. I heard some estimates in the 150,000 range up to close to 200,000. I didn't hear anybody predicting that we would see numbers under 100,000. 38,000 is just ridiculous. And there were revisions to the prior months as well, lower revisions. So the first quarter is looking very bad now, and we're not gaining any traction into the second quarter. There's been this talk that, we've had a weak first quarter, but everything's going to rebound in the second quarter. Well, it's not going to be coming from the labor market, that's for sure. Now, there's a little bit of noise in it because there was a Verizon strike, 35,000 information workers not counted in this latest number. So still, though, even if you add 35,000 back into it, you're still only looking at 70-some-odd thousand jobs in May. It's a horrible number. Federal Reserve has been saying we're data dependent. We will cut rates in some point, June, July, whenever, because the data is looking so strong. Well, throw that one out the window. This is just looking horrible right now. And I don't see how the Fed could possibly be looking at raising rates in June. And it really kind of makes July a little bit less probable. Right after the Fed funds futures rates, after these numbers came out, Fed funds futures rates dropped down to a 4% chance of a rate increase in June. It's just off the table.
Well, now the question is, what is the market really looking for? Are they rationalizing that higher rates are good and bullish, which you've been hearing in recent days and weeks? Or is the fact rates aren't going up really bullish for stocks anyway because of the stimulus or the potential stimulus of not having the higher rates? And so I think the market's a little confused here about what it's looking for, or at least what we're hearing.
I think the market is a lot confused here. Now, we know that certainly the banks would love to see higher interest rates. They can get bigger margins on their loans. They'd love to see the higher interest rates. But then the question is, are the low interest rates a problem for the economy? We saw this from the ECB meeting just yesterday. They left rates unchanged, and there has been evidence that the low rates over in the Eurozone just really haven't had a positive effect on the economy. We're not seeing businesses in the Eurozone investing. They've had a prolonged period of negative interest rates over there. It has failed to revive investment among European companies. The vast majority of businesses in the region say the stimulus measures have had no effect at all on their growth plans. Are we seeing the same thing from not negative interest rates here, but the incredibly low, near zero interest rate policy that the Fed has had? Are the low rates actually hurting the economy at this point? Market doesn't know what's going on, quite frankly.
Well, the ECB doesn't know either because it upgraded its growth and inflation forecast for this year, but warned of downside risks related to the global economy and worrying, of course, what's going to happen with that Brexit vote in the UK. You would think that the Fed wouldn't want to do anything, or anybody wouldn't want to do anything until we decided whether the UK was going to be in or out.
Well, that's another thing that's going to come up with the Fed vote for June. You're right, though. The European Central Bank says they now see growth of 1.6% for 2016. They raised that from an earlier forecast of 1.4%. Why they did that, I have no idea, because nobody else is seeing growth picking up in 2016 in the Eurozone. And for that matter, right now you got to look around in the U.S. and say, okay, where is the growth going to come from? I don't know.
Well, last I heard we had deflation offshore in Europe and everywhere else, and that's why they went to negative interest rates. So I don't know where this inflation forecast came in. It's really wild.
Well, yeah. Now they think inflation is going to pop up to 0.2%, 0.2%. Their previous forecast was 0.1%, but you're right. It is deflation that we are actually seeing over there. So, again, the rest of the globe seems to be dragging down the U.S. economy rather than the U.S. economy lifting the rest of the globe. And right now we're also seeing, treasuries drop down big on Friday. We saw gold with a big pop. The dollar was down. I think you're right. The markets are just trying to figure out what in the world is going on now, because there was a strong chance of a June hike, certainly a chance of a July hike on the table. June is gone. July, maybe. We'll have to wait and see if it can get any better than this.
I keep remembering about sell may go away, Sinclair. I don't know why that keeps coming up.
Well, it doesn't sound like bad advice now, does it?
Right, and at least recent years, there's been a lot of negative events in the summer that take the markets lower. So I think between now and the fall, we've got some problems. But we're going to pick up in just a moment, Sinclair. I know you have to run here, and we have to take a break. So we'll have Sinclair back shortly. We're talking to Sinclair No, author, commentator, KFNN Phoenix 1510, and author of the blog EatTheBankers.com. We'll be back in a moment. Thank you, Sinclair. And we have another special guest coming up on segment 4 this morning, a friend of mine, David GURWITZ from Charles Nenner Research. So you definitely don't want to tune that dial and stay with us for that. Very interesting on cycle work. Stay tuned. Thanks for joining us here at Wall Street Raw.
Go to WallStreetRawRadio.com for more information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
I'm Nick Soboleski, a Select Quote agent with a true story that could save you hundreds of dollars a year. A woman named Linda just called. Her husband, Ray, has a $300,000 group life insurance policy, but is changing jobs and can't take it with him. Well, I impartially shopped the highly rated term life insurance companies we represent and found Ray, who is 41 and takes medication to control his cholesterol, a 10-year, $500,000 policy for under $26 a month. That's almost twice the coverage for less than half of what he had paid. If SelectQuote hasn't shopped for your life insurance, you're probably paying too much.
For your free quote, call 1-800-403-4885. That's 1-800-403-4885. 1-800-403-4885. Or go to SelectQuote.com. We shop. You save. Get full details in the example policy at SelectQuote.com/commercials. Your price could vary depending on your health, issuing company, and other factors not available in all states.
Have you checked your Google search results lately? Search results are usually the first impression that people form of you or your business, so make sure that they create a positive impression with ReputationDefender.com. What the Internet says about you can have a big impact on your life and your livelihood, even if it's not true. Fortunately, you can now control how you look online and in online search results with ReputationDefender.com. Call 800-831-0771 now. That's 800-831-0771 for your free reputation analysis. If you have negative material from an ex-employee, upset patient, or former client, newspaper article, legal issue, social media, or other source showing up in your search results, you can combat it with ReputationDefender.com. Our dedicated experts in patented technology can help make your online search results look their best. Call 800-831-0771 to learn more. 800-831-0771. That's 800-831-0771. Or visit ReputationDefender.com.
Did you know a dirty CPAP system can make you sick? If you knew what could be growing in your mask and hose, you might not sleep so well. But now, SoClean.com has released the world's first and only automated CPAP cleaner and sanitizer. It kills 99.9% of all CPAP germs, and it's completely hands-free. For a limited time, you can try SoClean risk-free for 30 days. Just call 1-800-941-9796.
SoClean changed the CPAP experience for the better. My health has improved. It's simple to use, and I'm not worried about infections.
SoClean destroys CPAP bacteria, viruses, and germs, and it eliminates the daily hassle of washing your system by hand. There's no water, chemicals, or disassembly. Just pop in your mask, close the lid, and presto, your CPAP system is clean and fresh in minutes. Call SoClean.com to try it risk-free at home for 30 days. This is a limited-time offer, only available by calling 1-800-941-9796. That's 1-800-941-9796.
Anything that is thy neighbor.
Welcome back to Wall Street Raw. Want to know more about Wall Street Raw and the Leibovit VR newsletters? Go to WallStreetRawRadio.com.
Sinclair, welcome back. We're talking to Sinclair No, author of the EatTheBankers.com blog and financial commentator at KFNN 1510 Phoenix. Sinclair, the first quarter earnings season is just about over, and it appears the overall profit for S&P companies was the weakest in 6.5 years. We're just talking about the Fed potentially raising rates and, jobs not increasing. Well, the companies are having a bit of problem, too, here. It really seems like, those who want to talk about recession are gaining more and more traction.
Yeah, and this makes 4 quarters of declining profits among the major corporations, publicly traded corporations. And so usually you don't see, and I think that qualifies as an earnings recession. Usually an earnings recession would be an early indicator of a broader recession. It's not a guarantee, but an indicator nonetheless. And it's not just all back to the energy sector either. Certainly the energy sector has had a real downturn. They have not been able to cope with the lower prices, and it looks like the Saudis actually did push a lot of the shale producers into bankruptcy. But even if you take out the energy sector, we've got problems in corporate profits. Debt, again, when is this going to turn around? What will turn it around? I'm not sure that I see anything on the immediate horizon. Now, something could always happen, but right now it just looks like a little bit more sluggish growth.
Well, we know the markets are rigged, Sinclair, so maybe they're going to do a QE4. You just never know, right?
You never know. It's not out of the realm of possibility. And I was talking with somebody about this the other day, yesterday after the jobs report. There was a while where we had some fiscal stimulus going on after the big downturn in 2008, and that carried on for several years. Then we had the Federal Reserve continuing with their monetary stimulus, and that, of course, carried on for many years, really a little over 5 years, about 6 years. And even then, after QE3 went away, we still had zero interest rate policy. The Fed has been moving away from its monetary stimulus. The government has not stepped up with new fiscal stimulus. What is stimulating the economy? And if it's not fiscal policy and it's not monetary policy and it's not coming from organic earnings growth, and it's not because corporations, instead of taking advantage of a zero interest rate policy to reinvest in their business and try and organically grow their business, they decided to do some financial engineering. They decided to do stock buybacks. They decided to do all this crazy stuff that didn't grow their business. May have been great for CEO bonuses, but it did nothing to grow their business. And now, what's left to push them forward? It's just tough to see.
I know we've been talking about the financial engineering and also the lowballing of earnings reports and suddenly surprising everyone with higher reports as a reason or rationale to drive stocks higher. It's been just incredible what's been going on. Just fundamentally, it drives those who are into that fundamental sphere up the wall because it just doesn't make sense. You know, companies, as you say, are not growing organically and they're just reducing the float of their shares. It's just amazing what's going on. Ultimately, we're going to pay the piper, and maybe that will be a bear market. We'll see.
Now, I'll throw in one wild card, and we haven't seen it yet, but if we have some high productivity growth, that might explain why hiring has been down over the past 3 months and been declining. If you're producing, if your productivity improves dramatically, you don't need to hire as many people. That's a possibility, but so far we haven't seen the numbers to support it. Again, I'm still at a little bit of a loss to figure out where this growth in the second half is supposed to come from.
Well, maybe the recovery in crude oil might have something to do with more optimistic outlook. Some analysts are thinking, we can go higher, perhaps to the $60, $65 a barrel area, and that maybe will stimulate some, jobs which is the biggest employing area in the U.S., if I'm not mistaken, Sinclair. Is about 40% of U.S. employment related to the oil industry, one way or another?
A lot is related to it, but at the same time, we've also seen renewable energy start to pick up, and there were more new jobs created in renewable than there were in the oil patch last year. So there's that. But at the same time, if you see higher oil prices, that's going to serve as a tax on the consumer, and really the consumer is what drives the economic engine in the United States. Savings on oil prices didn't really spur consumer spending. It led to some more saving, in part because I think so many consumers are still, once bitten, twice shy. So this time around, when they saw some savings from lower oil prices, they decided to save that money. Now, if prices go back up, savings are going to dry up, and spending is not going to take off. It'll dry up as well. They'll just tighten that belt just a little bit more. So I don't see higher oil prices as being a positive for economic growth either. I think there's also a good chance we could see lower oil prices.
Well, the analysts certainly got that wrong on the economic benefit of lower oil prices. Yeah, the consumer is suffering out there. The economy is not what they're telling us it is, and they're saving.
That's true. And at least I give that to the average consumer. The savings rate increased, and people are, trying to hold on to every dollar that they can grab because, unlike businesses, they realized, hey, we got to invest in the household, whereas businesses did not realize that they have to invest in business.
Well, I think the bottom line is we got to be careful here, and I think the average consumer is, and we are in that negative period here in the markets. And if we get a little bit of a summer rally starting again, Sinclair, we still have that risk into the fall. So we're still in the dangerous period here, and the jobs numbers certainly didn't encourage the bulls very much. So appreciate you having you on the show. Yeah.
Always a pleasure, Mark. Thank you so much.
Thank you. Talking to Sinclair No, editor, commentator, KFNN 1510 Phoenix, and author of the blog EatTheBankers.com. We'll be back with Sinclair as soon as we can, hopefully next week or the week after. Thank you, Sinclair.
Thank you.
Interesting story this week. Saudi Arabia's sovereign wealth fund is investing $3.5 billion in Uber, the largest investment ever in the ride-sharing leader. So a managing director of the Saudi fund will take a board seat on the San Francisco company. But another interesting story, we touched on this briefly a couple of weeks ago with my guest, John Michael Nahon. Saudi Arabia and other Persian countries are scooping up land here in Arizona to grow alfalfa. Basically, they're shipping it back for their dairy herds back in Saudi Arabia. So just amazing that this is going on. There's a company called Fotomonte, and they purchased over 10,000 acres here in the last couple of years, and they're going to continue to do that. According to local experts, they're getting a lot of people out here a little upset that Saudis are coming in, complaining all this land, and it's basically a water play for them. So Saudi Arabia is very active out there. Stay tuned. We'll be back with you with our special guest on segment 4.
You're listening to Wall Street Raw with Mark Leibovit. Go to WallStreetRawRadio.com for information on Mark's newsletters and products. Stay tuned. Mark will be right back.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. Here, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market tsunami, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of his Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free Vice News Raw report. You will receive it weekly, and it is totally free. No credit card information is required, and no one will call. Sign up today for your free Vice News Raw report at WallStreetRaw.com. That's WallStreetRaw.com for your free weekly report from Mark Leibovit and WallStreetRaw.com.
Dangerous blood clot device alert. If you or a loved one had an IVC filter placed to prevent blood clots from traveling to your heart or lungs and suffered an injury, you may be entitled to substantial financial compensation. The FDA warns that IVC filters may cause serious complications, such as heart or lung damage, internal bleeding, and even death. These dangerous blood clot devices can break, and the metal fragments can travel to your heart or lungs, causing serious injuries. If you or a loved one suffered organ damage or other injuries from an IVC filter, you may be entitled to substantial financial compensation. Act now. Time is limited to file a claim. For a free consultation and free information, call Injury Help Desk at 800-478-1507. 800-478-1507. 800-478-1507. This is an advertisement. Paid non-attorney spokesperson. InjuryHelpDesk.com is responsible for this advertisement. Principal office, Las Vegas, Nevada.
Hunters, anglers, campers, and survivalists. Get back to nature. Expand your horizons with the highest quality, most versatile, unique slingshots and sling bows on the market at slingbow.com. Sling bow products are compact and models start from just $17.98. They're perfect for your bug-out bag or storing in your vehicle. Give yourself and your loved ones the excitement and tradition of sling bow. A new frontier in archery and truly modern twist on this primitive survival tool. Feel the thrill only at slingbow.com.
Think about this. Your community's aging water infrastructure systems are very likely to be contaminated with heavy metals like lead, disinfection chemicals like ammonia, chlorine and chloramines, and pharmaceuticals like statins, pain meds, and antidepressants.
And no, water treatment plants are not equipped to filter these pharmaceutical toxins out.
Protect your family's water supply with the trusted Big Berkey water filter. New NSF EPA-certified lab tests show Big Berkey water filters remove chloramines, pharmaceuticals, BPA, pesticides, bacteria, and viruses, all forms of fluoride, and much more. Big Berkey water filters are the original and most trusted on the market, the gold standard in water purification, and our filters last for years at less than 2 cents per gallon. Big Berkey, the one powerful enough to purify stagnant pond water. Get your Big Berkey today. Call 1-877-99-BERKEY or click BigBerkeyWaterFilters.com. That's 1-877-99-BERKEY. Big Berkey Water Filters, for the love of clean water.
Are you worried about how dangerous the world has become? In these days of terrorist attacks, natural disasters, or even a future collapse, you need to be medically prepared to keep your family safe. I'm Joe Alton, MD of store.doomandbloom.net, where you'll find an entire line of uniquely designed medical kits and supplies for when help is not on the way. For everything from individual first aid kits to the ultimate family medical bag, go to store.doomandbloom.net today. That's store.doomandbloom.net. You'll be glad you did.
Responsibility begins and ends with our partners and our shareholders, and that's it.
There is no freedom without the law.
Get it? Got it? Good.
Welcome back to Wall Street Raw and the final segment with Mark Leibovit. Now, here's the elf himself.
Welcoming a very special guest this Saturday morning on Wall Street Raw, David Gurwitz, who's Managing Director of Charles Nenner Research. At times like this, it seems to use forecasting techniques that help you look around the corners. For that, we have cycle researchers, and one of the best over the years has been Charles Nenner and Charles Nenner Research, and David is the managing director of that company, and he is responsible for working directly with clients to assess the markets, and he's worked hand in hand with Charles for many years, and it's a pleasure having you on the show this morning, David.
Thank you for having me. I really appreciate getting a chance to share what we do with your listeners.
So I know you guys do a lot of work with the overall global macro state of the world, the economic factors and cycles, stocks, bonds, commodities, currencies. So we only have a few minutes, but let's jump into it. Tell us a little bit about what Charles Nenner Research does and how you view these markets.
Great. So let me just give you a quick background of how he found out he had this talent, and I met him. And then we'll just give you everything on stocks, bonds, commodities, and currencies, 5 minutes. ADD special.
Okay, great.
So Charles was in medical school and found out that he had a gift for patterns, and he found out that he was able to find from past patterns that there were things called cycles from the Greek word circle, which are pretty much equidistant top-to-tops in any data series. Sine curves. And if you find IBM topped every 2 weeks, 10 weeks, 15, 37, and all those sine curves are topping today, for some reason, it's a top. We don't know why, and we don't care. And that was the basis of what he came up with, a system, and got a computer person to, make it into a computer program, and then created a target algorithm. And he became so good. He worked at Goldman Sachs for 15 years. I met him about 15 years ago, kind of like when Springsteen met Clarence Clemens when the big man joined the band. Okay. And we somehow combined, and we're now one of the biggest research firms in the world. We send out a research letter Monday, Wednesday, Friday with charts on Sunday. Your listeners are welcome to go to www.charlesnenner.com and request a free month. And we cover U.S. and European stocks, the VIX, which is volatility. We cover U.S. bonds, the 10, the 30, and TLT, which is, of course, the bond ETF. We cover German Bunds. We cover gold, silver, We covered crude and nat gas in 5 currencies, the yen, the euro, the Aussie, and the Swiss, and then the different crosses. That's Monday, Wednesday, Friday. And then on Sunday, we do a lot of charts on many different global macro things, like you correctly said. We have clients all over the world, hedge funds, family offices, individual traders. Let me tell you what we're seeing based on what we've called. And, you know, it's been a tough year and a half for people in the stock market because it's been flat for 18 months. It's been sideways. We called 2 big tops last August and this January, and we were right. This last few months, you know, it's come back up, and we're still expecting a down move now before the next part of the year moves up again, and a big top next year, Q3, followed by years down. That's the big picture in stocks. Bonds, we also called 10 years ago. We called everyone to buy the 10-year bond at 4%. Look where it is now. It would have gone up so much that people, you know, loaded it up. Crude, we called the top at 97, all the way down to 27. We think we'll be up towards 60 by the summer. Nat gas also up. Gold, we called the top 4 years ago. Been a very difficult bottom to call, and we think we're near the bottom now. There's one more down move. Same with silver, but longer term, they're both up substantially, as are the gold stocks, which, as we all know, have been beaten up rather badly. As you're out in your listeners are in the Northwest, maybe some in Canada, you would know. And then currencies, which is the biggest market in the world. Most Americans don't focus on that. We think the dollars, we've called this dollar strength for a while, and we think it will continue, but longer term won't be the case. That's kind of the big picture, and we covered this all in the newsletter.
With the spreading of negative interest rates in Europe and Japan, do you think that's coming to the U.S.? Does any of your research point to that?
The opposite. I mean, shorter term, yes. When I say negative interest rates, bond prices down, therefore rates up. So not exactly what you see around the world, but we think rates. Well, I'll give you the big picture. 35 years ago, rates were 16. Now they're 2. And 60 years ago, they were 2. Right? I was born in 55, 1950, the U.S. government was selling 2% savings bonds. So that's been a 60-some-odd year cycle. It's going to go back, and rates are going to go up again. Even though people say, how could it be? The answer is having low rates is not really good for business, even though people think it is. It's just look at how much debt's around, and we think this is going to all lead to some very negative situations starting in about a year. There's also war cycles, which we've looked at for the last 20 centuries. Anyone writing in will ask to say they listen to you and I speaking, David GURWITZ and you and I speaking, and we'll send to them the war cycle study we did about a year ago showing a major war in the second decade of every one of the last 20 centuries. So we're in the second decade of a century now, and we think we're going to have a major war coming.
Well, you know, we've had a war already with terrorism and so forth anyway, but there's trouble all over the world.
We think it'll get worse. But that's what we see. Not based on news. The news comes after the cycle. When there's a cycle top, something comes along in the news that causes it to be a top. We don't know what it is. We can never know. But that's kind of why we say there's really no free choice. Everything is already set up, and people have a hard time with that, which I understand. You know, I also have a hard time with it, except it works, so I've gotten past it, you know. But this is how we predict, and we've got a very big business, and we don't manage money. We don't want your money. We just want to show you where things are going to go, and we have different things in the service, you know, interactive and, you know, intraday and medium, long-term, and clients seem to be happy.
So if our listeners want to get in touch with you again, David, or with Charles, what's the best way of reaching you guys?
Just to Google Charles Nenner. There's a site, charlesnenner.com. There's a big button and it says contact us. And hit it and say, hi, David, I heard you put me on the trial, and let's go. Let's see what you're talking about.
Well, thank you so much for joining us. We had a very short time period here, and we'd like to cover a lot more detail, but I think we hit the highlights. We're talking to David GURWITZ, Managing Director of Charles Nenner Research, and hopefully we'll have David and or Charles back real soon. I've been following this stuff for years. In fact, we exchange newsletters, I believe, just about every day, and I've been reading Charles' stuff for several years, so I wanted to get him on the show, and really a pleasure, David, for you taking a few minutes. Thanks for joining us. David GURWITZ from Charles Nenner Research. Thank you again, David, and thank you, Sinclair, too, for joining us here today. Well, we're in an unprecedented era of central bank intervention, and we have an election coming up. And while the central banks have been building their balance sheets, they've been intervening in various asset classes. As you know, government and mortgage-backed security purchases are the most obvious, as they've been the foundation for the Fed's QE programs, which you know about. The currency market intervention occurs on a regular basis and is eventually reported some months later. Stock market intervention is generally never reported, with the exception of China and Japan's recent admissions of direct buying of equities to prop up their stock market. So the Fed, however, never reports direct market intervention, even though most of us know that they're given the authority to do that. We have the Working Group of Financial Markets signed into law by Ronald Reagan back in 1988. Some call it the Plunge Protection Team. And this is what could be going on here. Every signal out there is that we should have a sell may go away, a significant correction into the fall, eventually ending up in a bear market here over the next year or two. But now we see indexes creeping up here in early June, and we're seeing some relative strength in the Russell index and the mid-cap. So we could break out here despite the bearish signals and squeeze the bears, myself included, so we have to be careful and trade it accordingly. So that's really the risk here, and we have to know that intervention is occurring out there. Let's make Wall Street great again. Let's make journalism great again. Let's make America great again. And that's what we really need to be talking about, and what changes need to occur to really make the system better again, because we have too much central bank intervention, too much rigging. It's not a free marketplace, and ultimately that's what we really need to make a system work. And I enjoy having you on as a listener, and enjoy having my guests on the show, and we really try to talk about all these key issues every week here on Wall Street Raw. Every week I remind you, Ed Hart used to close his show, and we will here too. We will know in the fullness of time. Speak to you next week.
Wall Street Raw with nationally recognized market timer and previous Wall Street Week Elf, Mark Leibovit. If you missed any of today's show or to get in touch with Mark, please go to WallStreetRawRadio.com. Any stocks or investment discussed on Wall Street Raw are not in any way a recommendation or solicitation to buy, sell, or hold. We first recommend you seek out a licensed financial professional for advice. Go to WallStreetRawRadio.com for more information on Mark's newsletters and products.
High-performance investors and traders use superior financial tools to achieve superior returns. You have that tool with Mark Leibovit, nationally renowned top market timer, legendary television Wall Street Week elf, and nightly business report market monitor, who shares with you his unique market tools and commentary at WallStreetRaw.com. At WallStreetRaw.com, Mark provides you with his latest ideas on how to help build and protect your wealth, help you avoid the next big market crash, and also stay healthy to enjoy your wealth. Mark has a special free gift for listeners of the Wall Street Raw radio show. Go to WallStreetRaw.com and sign up for his free weekly Vice News Raw report. While there, go ahead and sign up for his free Gold News Raw report. You will receive both weekly, and both are totally free. No credit card information is required. Sign up today for your free Vice News Raw and Gold News Raw reports at WallStreetRaw.com. That's WallStreetRaw.com.
Paid non-attorney spokesperson Adam Pulaski of the Pulaski Law Firm with principal office in Houston, Texas, is the attorney responsible for the content of this ad. This ad is not legal advice, and the choice of a lawyer should not be based solely upon advertisement. Services may not be available in all states. Attention Xarelto users. If you or a loved one took Xarelto and suffered a serious bleeding event, you may be entitled to financial compensation. Xarelto is a popular prescription blood thinner used to prevent blood clots and protect patients from strokes. These serious bleeding events have led to numerous cases of hospitalization and even death. Phone lines are open 24/7. Call 800-261-0937. That's 800-261-0937.
Worried about lead, fluoride, and other contaminants in your drinking water? Get a ProPure with the Pro 1G 2.0 cleanable reusable filter and remove up to 200 contaminants. Drink water the way nature meant it to be. Clean, crisp, and refreshing. See the complete line of ProPure products, including the new ProMax shower filter. There's a ProPure for you. Visit your authorized ProPure dealer for details or ProPureUSA.com. That's ProPureUSA.com.